Hello traders, the title of the video is how to trade a rising or declining RSI oscillator slope like a superpower, a technical trader. So I know what you are thinking. You say, George, what's this that superpower? A technical trader, all right? So you want to flow with the market. You don't want to fight the market. This is about a superpower, all right? A technical trading, all right? So in this tutorial, very simple but powerful, I will share with you, all right, a trading strategy that utilize, okay, the RSI slope, either a positive slope when the RSI is rising, a negative slope when the RSI indicator is declining. For new traders, I want to mention that the RSI stand for relative strength index indicator, is a momentum indicator that allow technical traders to identify a bullish stock and a bearish stock. That's it. It's not about overbought and oversold. It's about identifying bullish and bearish stock. That's the ultimate role of the relative strength index indicator. And you will see in this tutorial, at the end of the tutorial, you understand why I'm using the word superpower technical trader. A trader that does not fight the price action, a trader that wants to flow with the price action in conjunction with the relative strength index indicators slope. All right. So here we are. So what am I talking about here? So you can see that. Will you agree with me that the RSI is rising here? All right. If you disagree, let us know. All right. And we'll all come down on you big time. All right. Don't be afraid, my friend. The RSI is sloping up. Okay. Sloping up. All right. So this is what we call positive slope. So traders who have done a bit of math, you understand that. All right. So here we are. RSI going up. What are we talking about? You are talking about superpower technical trader who does not fight with the price action. All right. RSI is sloping up. If you see that the price did what it always does, which means break above a resistance level and retest it, break below a support level and retest it. So RSI is sloping up. You see a higher low, price breaks above a key resistance level, retest it. You will implement a top-down trading method to trade it. So you may say to me, George, I already know that. Now, if you know it, that's good. All you need to do now is to put into use and own it, work on it, master it. So when we see it like this, you can see that we have all these doji, blah, 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 candlestick bar coming to this zone. We will now implement what we call a multiple time frame trading method. So you see this on the 4-hour time frame. That's a trading setup on the 4-hour time frame. You see this on the hourly time frame. That's a trading setup on the hourly time frame. You see on the monthly chart like this. That's trading setup on the monthly chart. We use different time frame trading method. So you do not buy or sell on that time frame where you find this trading setup or that trading setup. All right, here it is. If the price form again a new higher high, and that a new higher high is followed by a higher low, well, that's another invitation to buy again here. So you see here, you can see that those candlestick bar price, it was a resistance a bit here, price breaks above again, retests it again. Another invitation to buy. Why? Because the RSI is rising. The RSI is a powerful momentum oscillator. Is indicating to us that the speed of the price is increasing. So as the speed of the price is increasing, if we see the price pulling back a bit, that's an invitation to buy. We don't just buy because sometimes the price may pull back and continue to go down. So in order to avoid just buying and losing, or which is quite painful sometimes, all right, you don't want that. So you pull back like this, or you see a candlestick pattern, or you see a bullish chart pattern, all right, you implement a top-down trading method, all right, to trade it. Here again, you can see that RSI is still going up. There is again another pullback. One warning for traders. You want those pullback to retest a key level. So what has happened here? See here, this candlestick bar, if you highlight the high, the low, and the median line on that long candlestick bar here, that pullback was retesting that median line. So anytime you see a pullback or a bullish chart pattern or a higher low while the RSI is rising, you want those bullish trading setup to be at a key level. Break above a resistance level, retest it, or retesting a high impact a key levels. This is what has happened here. Price was retesting the median line or that long candlestick bar. Professional responded, they bought it. You see here? So you find a resistance here, now it's coming back down. You see? That's happening here. Okay? So you will not buy after that candlestick bar is closed. The pullback must be completed. The candlestick bar pulling to retest that key level must close. If you do not want, if you are in a hurry, alright, you don't want to wait for the monthly candlestick bar to close, drop down to the weekly chart. Wait for that weekly candlestick bar to close. Say, George, that's too late for me. I'm a day trader. All right. Go to the daily chart. Wait for that daily chart candlestick bar to close when it's retesting that key level, and then implement multiple time frame trading method. All right. The opposite is, it's happening all the time though. It's happening all the time. Here it is, you see here. So let me show you another example. So let's play with it for a while. So you see RSI is declining. Do you agree or disagree? You disagree. All right. So we disagree. All right. So RSI is declining, okay? Feel free to disagree with us. So yeah, what are we looking for? Key level. So here there was a key level, yes or no? It's changing direction here, it's changing direction here. So the key level that we are talking about here is the level of $30.48. If you break below that key level, while the RSI is sloping down and find a resistance, we will sell. Here, this is a tricky one. That's why I want to show you here. You see the candlestick bar that pierces through that key level is long candlestick bar. In that case, you highlight the high, the low, and the median line of that long candlestick bar, and you want a bit of rally near that median line. This candlestick bar, you can see, got a tiny shadow, not much. The bearish trader were quite aggressive here. They just push it through. Understand what is happening here, my friend. The price is always going to a specific target level. There is a target that the professional watching. Can you see a triangle, a kind of triangle? Can you see? There's a triangle here. Almost to the target, almost. Or we say midpoint target somewhere there. All right? Are you with me? So call it midpoint target. Somewhere in that zone. All right, so here, this is what we are talking about. RSI declining. Here again, is declining. Here, you see what's happening here. Pay attention carefully, my friend. The RSI is declining, but the price did not break below a key level or retest it. So nothing here for us. So when you see that, this is another negation. You understand what we are talking about? Negation or trading signal. So what we were talking before, we say declining, break below, retest. But if it's declining like this, and all right, we didn't see any break below, we need to be prepared to understand the negation of the signal, which is quite tricky here. So it's declining, but the price forming high low, high high. We talk about that in another video. I don't want you to confuse. Let's stay with the topic that we are discussing today. All right, so you get a message. All right, let's go for instance to the 4-hour time frame to see whether we'll have another example here. Here we have RSI declining on the 4-hour time frame. Daytraders say, yes, George, that's what we are talking about. Okay, here we are. You see it's declining. What are you looking for? Key levels. So this is a key level, yes or no? All right, this is a key level. Okay, there's one here. See the red line? Break above, retest. Okay, not much here going on. Will you call the top here, the red line? Okay. no, it's not a good one. That's why I say to you, use at least daily chart, weekly chart. So on the 4-hour chart, it's quite no. See here, we'll call this one key level. All right. So RSI is declining, probably below that. If you accept that, it's a key level. Break below, retest. RSI is declining on the 4-hour time frame. Alors, okay, common sense trend line now is kaput. First candlestick bar down. Use the top down trending method to take it down. All right, that's what we are talking about. Here we have RSI on the 4-hour time frame. I recommend to trade, even if you are a day trader, you can use a weekly chart, monthly chart, even quarterly chart, and break it down even to the 15-minute time frame. All right, I trade a lot of the lower time frame, so I'm showing you now. So during that time, the RSI is rising. Do we have any example here? Yes. Call that zone. You see, it's a key level. Test, retest, retest. It's consolidation. It gap up. In fact, was a bit too late though. This is not a clear cut one. But you can see that probably pull back a bit here. It's not. That's why I say to you, use a higher time frame, then continue to go up. So pull back a bit, close above it. Now it gap up and run away. All right, more examples on the 4-hour time frame. RSI is declining. What are we looking for? Break below, retest. Here it is. So if you call this one a key level, so break below, retest a key level, implement a top-down trading method to take it down. All right. If you see another lower high, you want to take advantage of it. All right, very simple. So I recorded a video before when I was talking about bullish chart pattern. This time we are talking about break above and retest a key levels, and we implement a top-down trading method. All right. So RSI is rising or sloping up. RSI with a positive slope, and the price breaks above a key level, retest it, and validate that key level at a support level. We will use a top-down trading method to buy each. RSI is declining, sloping down with a negative slope. Price break below a key level, retest it and find a resistance. Common central line is kaput. That candlestick bar must close. We implement a multiple time frame trading method to trade. So you want a 4-hour time frame like this. You use 4-hour time frame for your trading setup, 15-minute time frame for the signal, and 3-minute or 5-minute for the entry. As always, when you learn something new for the first time on YouTube, I'm not speaking to all traders. Traders have been following. I know that I talk about this all the time, but it's not specifically to you, all right? It's to other traders that are watching this video, or use a demo account. Practice, get yourself ready to go into the ring, so to speak, with the best traders out there. All right, this is what we are talking about. All right, it's happening all over the place. You will say, George, all right, I'm a die-hard scalper. You have something for me. So when you go to the lower time frame, you see that the RSI will be going up and down very, very fast. All right, it's become tricky to see a quite trending RSI. All right, so at least use a 2 times frame. All right, 2 times frame. It's happening on the hourly time frame. All right, here it is. Similar things, RSI sloping up on the hourly time frame. We are in this session here, are we? Yes. Here it is. It breaks above. That resistance, and break above, retest here. RSI is rising, boom, up. All right. It's what we want to look for all the time. All right? So the gorgeousness, so to speak, or the nice thing about this trading setup is that one is not buying anywhere anyhow, but one is buying or selling at the key level. That's the advantage of it. So it reduces the risk that we are taking because we are buying and selling, okay, near a key level. So we can hide our stop loss just a little bit above 10 pip, 15 pip above that key level. All right, that's the advantage of this, a trading strategy. All right. If you have any question or suggestion, all right, feel free to put in the comment section. I always read all the comments, all right? And in due course, all right, I will be recording another video to answer your specific question. So this will conclude our discussion today about how to trade rising or declining RSI oscillators slope like a superpower technical trader. A superpower technical trader is a trader that does not fight the price action. The price doing two things all the time. It breaks it above a key level, retest it, validating that key level at the support level. Price is breaking all the time support level, validating that support level as a resistance level. We can take advantage of that by combining that specific price, activity, price action, price structure with, the rising and the declining RSI slope. All right. If you find this video truly useful, all right, let us know by giving us the thumbs up. If you think that Joe, you have not done a very good job today, all right, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share with your friend on Google Plus, on Twitter, and also on Facebook. Until the next time, my friend, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade rising or declining RSI oscillator slope like a superpower, a technical trader. Do you feel like a superpower, a technical trader? Let us know in the comment section. Happy to meet you all and speak to you soon. C'est bon.